Hey, crypto friends. Now, when we are talking about trading the crypto market, you do not need to be a professional trader to be able to pull in consistent profits from the crypto market. In fact, after I personally finally figured out a trading strategy that worked best for me, I started using this simple approach that was making me over $500 per week, and even more with even more these days, since now that these days I trade with much larger capital than I did 2 3 years ago. And hardly anybody talks about the basic strategies like this, but once you see how this works, you will realize just how much easier trading can actually be. And for those of you who love trading crypto and would like to try out the same crypto exchange that I use on a daily basis, feel free to go ahead and try out the Blowfin exchange here with the link in the video description down below this video. I personally love this exchange because they allow anybody from anywhere to be able to sign up and trade crypto futures. All right, guys, so we are going to go ahead and dive into this video. And since I typically trade the 1 hour charts the most often, the very first thing that I like to do is I like to mark out my Fibonacci levels on the 4 hour chart from swing low to swing high, or from swing high to swing low, depending on which direction the most recent swing trend happened. All right, in this case, we most recently had a downtrend, so I marked my Fibonacci levels from swing high to swing low. All right. Now, the next thing that I'm going to do here, or that I usually do, is move to the 1 hour chart after that, all right? Because this is the chart that I am entering my positions on most of the time, and the chart that I'm trading on, all right? Now, when I move to the 1 hour chart, the next thing I do is I turn on my 7-period moving average right in here, all right? As you guys can clearly see. And I look for the following conditions after I do that. All right, let's see here, there are 6 different conditions that I look for to base my overall bias on if I'm going to take a trade or not. All right, the first the first condition I look for is, are there any candlesticks that deviate far away from the moving average? That would potentially create a potential reversal. The second thing that I look for is, are there any bullish or bearish reversal candles? The third thing I look for are there any bullish or bearish charting patterns? The fourth thing I look for is, are there any potential upcoming moving average crossovers? The fifth thing that I look for is, are there any potential upcoming moving average rejections? The next thing that I look for, are there any potential upcoming moving average bounces? All right. So as you guys can clearly see, there's all kinds of different conditions that I personally look for before I take a trade. All right. Now, after I find out what the conditions are, I base my bias between each Fibonacci level, all right? Between these, each level by level, all right? I'm not looking at the gigantic big picture here. I'm just looking, I like to take things level by level and go from there, all right? Now, I base my long and shorts based on these levels and based on the bounces and rejections at these levels as well, and where price actually is in correlation to the moving average as well. Okay, now here's an example of how I would trade this. Now, since I've got my Fibonacci levels going from swing high to swing low because of this downtrend that we recently had, what I am going to do next is I'm going to start looking for these conditions. Now, the first condition is, are there any candles that deviate far away from the moving average for a potential reversal? All right. So here we have this gigantic candle that moved far away from the moving average, and that is going to signal a potential reversal. Now, since this specific candle was, since we already had a bunch of other candles that deviated super far away from the moving average without having an actual reversal back to the upside, I would assume that obviously this one is going to be the actual reversal where it happens, all right? And as you guys can clearly see, that is definitely what happened in this specific scenario. So that is one condition that I look for that has obviously shown itself, okay? We've got our candle that deviated far away from the moving average. Okay, therefore, I'm going to wait for the next candle to open and see what happens. The next candle turned green, but it was a spinning top candle. And see, this is the next part that I look for. I look for the candlesticks themselves and see what the candlesticks are doing themselves, all right? Meaning, are there any bullish or bearish reversal candles, okay? So, as you guys can clearly see, this is, I mean, yes, it is technically a bullish reversal candle because it is an indecision candle and it's green, so therefore it is a bullish reversal candle, bullish indecision candle, but it is bullish nonetheless. So then I wait for the next candle, all right? Next candle opened up and it ended up going up, ended up coming back down, and it came down a little bit further, but it ultimately ended up closing above the body of the previous candle. So that tells me things are still bullish. Next candle ended up opening up and it was still bullish. So overall, we are starting to gain bullish momentum back into the market, or back into this coin, as price action is starting to go up, hour by hour here, okay? Ultimately, what I want to do is I want to see price action reach back to the moving average right up here and start gaining support right at the moving average or above the moving average, because when price action is above the moving average, it typically means things are bullish. When price action is below the moving average, it means things are typically bearish. So if we come down super far like this and go back to the moving average and we start hovering at the moving average and, finding decent support at the moving average itself and not continuing to move any further down towards what was now the new support level down here, that tells me that bullish momentum is overall building. Therefore, I'm going to enter a long position somewhere along the lines right in here because we are finding good, decent support right here. And that also tells me that we could potentially be having a good, solid potential reversal coming up here very, very soon. All right. So if I go ahead and enter my position right in here, all right. So we got an entry right in here, right at the moving average here. And we've got a rounding bottom on the moving average kind of starting out here as well. So that's another thing that's telling me that we may actually have a reversal pattern happening here very, very soon. All right. So the next thing I do is I tell myself that I'm going to wait for, I'm already in the position and I'm going to wait for the next candle that moves upwards, all right? Now, I'm going to also set my stop loss at the bottom of this support level down here as well, all right? So my stop loss would have been set at 185, but I ended up entering at right around 188, okay? So I've got my stop loss set in place, and I'm waiting for a move upwards. Now, I'm not waiting for a gigantic move upwards. What I'm waiting for is I'm waiting for a movement upwards to this next Fibonacci level right in here, okay? So I enter my trade right in here. I ride it up to this first moving average here, and boom, I would have made roughly pretty much right around 2%. Now, since I use typically in most of my trades, I'm using 20x leverage. That would have been a 40% profit for me, okay? Now for you, if you have small capital, let's say you're entering trades with like $200 or something like that, and you're using 20x leverage, $200 multiplied by, let's see here, that would have been, since it was a 2% gain, multiply that by 20x leverage, that's a 40% gain. So you would have made, let's see here, just going up to this one Fibonacci level alone, you would have made $80 right there, okay? So that's $80 right there, still within the same day, okay? So you ride it all the way up to this Fibonacci level and you wait, okay? You can either take your profit right there and take your $80 and try to get back in, but what most people do is, since price action is still above the moving average here and things are still looking bullish, you may not want to get out, all right? And in this case, you wouldn't want to get out here. And the reason why, obviously, is because, like I was explaining earlier, price action continued to stay above the moving average here. Or therefore, it could still continue to go even higher and higher and higher up to even the next layer of the Fibonacci levels, which is right in here, all right? So realistically, if you were still in, not only would you profit from this, but you'd also be profiting from here. Now, right here is where you would want to get out. And the reason why, actually, you'd want to get out right in here at the top of this candle. And the reason why is because, like I was explaining earlier, when we get a candle that closes and it's super far away from the moving average, it deviates far away from it, it typically signals that price is going to start moving in the opposite direction for a little bit, all right? And that's exactly what happened. We had a little bit of some downward action right here, right at this Fibonacci level, and it wanted to retest the moving average, all right? So if you were to have ended up trading that all the way from down here all the way up to right around in here, you would have made roughly around 4.8%, all within the same day. Still, we're looking at roughly 12 hours here, and nobody stays up for 24 hours, but people do stay up and trade for 12 hours straight. So realistically, this would be roughly around 1 day of trading right in here, okay, which would be about 4.8%, which is what you would have made. You know, you've got $200 in this trade, and if you made 4.8%, 4.8 multiplied by 20, let's see here, 4.8 multiplied by 20, so realistically you would have made a 96% gain right there on that one trade right there, okay? So 96%, we take $200, multiply that by 96%, so 96, and you would have made $192 that day, all right? Now, if you're doing this for 5 days straight, you know, if you're averaging roughly around $150 a day and you're doing it for 5 days straight, you're easily going to make over $500 a week doing this, okay? And it's very, very easy to do. It's very simple to do. You don't have a chart full of random indicators. You're just using a basic moving average coupled with the way candlesticks are moving, also coupled with also coupled with Fibonacci levels that are used as support and resistance. It's very, very simple. It just takes time to actually kind of figure it out and kind of get a feel for how things are going here, guys. But overall, I've been using this strategy for about 2 years now on a consistent daily basis, and it took me roughly 4 to 6 months of using this strategy and figuring it out and putting all of the pieces together before I actually started profiting consistently from it. So if you're not making profits from it right away, it's not because you suck at trading or anything like that. It's simply because trading is a skill, and just like any skill out there, it takes time and consistency to be good at it. So if you stick with it for the long term, you should start seeing some positive results from it in the long term. All right. Now, if any of you guys have any questions, for me about this specific strategy, or anything else related to trading or anything like that outside of my videos, feel free to go ahead and join my ACR Trading Discord community with the link in the pinned comment below this video. Other than that, guys, before I go ahead and wrap this one up, if you enjoyed this video and you feel like you got some pretty decent value out of it, please be sure to go ahead and subscribe to the channel, hit the like button below the video, and drop me a comment below on your personal thoughts of what you thought of this video. And with that said, for those of you guys who stuck around and watched this entire video throughout the whole thing, thank you guys very much for watching. I appreciate all of you, and I hope to see you in my future videos.